Hey folks, happy Friday to you. Matt Buckley, call sign Wiz, the primary model portfolio manager here at Top Gun Options and also the chief strategist. Hope you had a great week. What I wanted to do briefly was just take a quick walk through our model portfolio positions, not only for the trade alerts, but for the live trade briefs, and just give you a quick how goes it before we start our weekend. Loving what's going on in the model portfolio. Since I took over about 2 weeks ago, up about $2,000 in the model portfolio. And what's in the red over here, we'll talk about in our debrief here. But this VXX trade, it's doing exactly what we want it to be doing. So Amazon Iron Condor that we put on, going right down the fairway. We're loving it. Theta is our friend in this case. Let's analyze it real quick, see what the probabilities are looking like. Still about a 68% chance of capturing our full credit of $2,240. So working out nicely for us there. Again, this is a May 175, 180. 230, 235 Iron Condor. That means that's a 175, 180 bull put spread and a 230, 235 bear call spread. Only threat out there is earnings on 423, but we're giving us enough room, for in the goalposts of this Iron Condor for earnings to go good, bad, or indifferent, and then settle down by into its normal trading range by May expiration. So like in the Amazon Iron Condor, this Bank of America diagonal, again, like we talked about in our live trade brief, what leads us out of a recession? What industry? And I can hear you all say it, financials. That's exactly right. Historically, financials have led us out of recession. Banks start lending again. People start spending on their credit cards, asking for loans, quack, 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 all that good stuff. So this diagonal, again, is a long-term trade on the financials, especially Bank of America, but short-term bearish. So we bought that deep in the money Jan 13 7.5 call and sold the front month, the April 10 call, and that's exactly what we wanted to do. We're 60 cents under $10 there. We got earnings. My mom would kill me. We have earnings coming out on April 16th before expiration, but we're comfortable with the cushion we have in there, and we love the fact that we bought this, 80 delta call January 13 7.5. So again, like in the Bank of America trade. Google Iron Condor that we put on this week. Again, it's a earnings trade. We're not going to see much activity on this. Why? Because that volatility is going to spike before earnings come out on the 18th, like we discussed in the trade alert I sent out this week on 18th, and the expiration is technically the 21st, Saturday, but the 20th for all intents and purposes. And we have a 71% chance of capturing our full credit of $2,100. So hopefully between that Amazon and this Google Iron Condor, there's about $4,500, $4,700 in model portfolio profits here. So like in the Google Iron Condor, the USO double vertical spread, that's a bull put spread and a bull call spread stacked on top of each other. This thing's going to be volatile, folks. In the live trade brief we were watching this, it was up 20%, down 10%. USO is a very volatile index tracking the oil index. Rebels attack a pipeline somewhere, it spikes. Saudi Arabia releases some oil, it drops. So we talked about this being a good ETF to trade short term, but this trade is more of that long term. Well, long term, I say out to June. Looking at the summer driving month, spike in oil, and a potential conflict between Iran and Israel, which has simmered a little bit. But again, this is one of those. It's either going to these type of double verticals are an afterburner. They either zoom up or zoom down, and rarely do they stay flat. And we're not going to let this thing fly into the ground and cause us a big loss. Not too much of a loss right now, even though percentage-wise, like Wiz, what are you talking about? We're down 145%. Well, let's look at the year-to-date, loss there. It was an initial debit of $330, so we're really not down too much. So don't sweat the percentage gain. Kind of like that last Las Vegas double vertical that was up 720%. These double verticals, move like that. And finally, our VXX diagonal. last position in our debrief today, kind of like the Bank of America diagonal, this is long-term bullish on volatility. I got interviewed 2 days ago by Reuters, Thomson News Service, about oil and volatility, and you can check out that column on our on the TGO homepage. I think I put it up in the Ready Room as well. But again, this is the smart money knows, folks, that volatility is not going to stay this depressed forever. It's physically impossible. Something's got to give. Whether it's the elections, it's another European issue, it's Iran and Israel, something most likely bad is going to happen. But the front months, that upside call that we sold, the 25, is, we're kind of bearish on volatility right now. Everybody's, singing zippity doo-dah and having a great time trading. Well, we bought that deep in the money January 13-15 call, remember, with about another 0.8 delta. And this is just our strategy, is to keep selling those upside front month calls to help finance this deep in the money January 13 call. Well, not deep in the money, because what? Volatility is really coming in here, but we don't think that's going to happen, or it's going to stay that way forever. And everybody, all the smart money on Wall Street, is keeping one eye on the door, waiting for somebody to yell fire. And everybody is hedged with a position like this. So can't be all wrong. Like we talked about in our live trade brief, if everybody's jumping off the bridge, and you can hear your mother saying, well, would you do it too? Well, in this case, yeah, I would, because I know that volatility is going to spike eventually. And if it doesn't, I'll be the first one to admit I was wrong, but a lot of other quote-unquote smart people, not that I'm calling myself smart, are going to be wrong as well. And I don't think that's going to happen. But like we talked about in the live trade brief, you want your portfolio to look like a Christmas tree, or the console of a submarine panel. You want to see some greens and reds. If you're seeing all reds or all greens, you're not hedged. And this is exactly where we want to be. So that's a quick debrief of our positions through this Friday. Hope you have a great weekend. Relax, hang out with the family, friends, and we'll hit it hard again next week. Matt Buckley, call sign Wiz, the Chief Strategist here at Top Gun Options. Have a great weekend, and I'll see you next week.